Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we have returning guest Peter Grandich on the show. Peter's been an investor and speculator for 40 years in the natural resource space. Peter, thank you for coming back on the show.
And I feel every bit of that 40 years right now on my portfolio. So
Well, Peter, it's always a pleasure having you come on the show. I love getting your perspective, especially for someone that's been doing this for so long. And yeah, I'm grateful to have you. Um, Last time you were on the show, you said that gold was your number one pick. Are you still all fired up on gold? Is that still your number one pick?
yeah, Steve, let me tell a little in case people haven't followed. At the end of 2021, I made a decision for myself and the handful of clients we are part of still a financial planning group that I felt that gold was going to outperform both stocks and bonds for at least 3 years going into 2025. And so I chose not to have any general equities that wasn't related to natural resources and anybody that wanted to listen to even sell bonds. And the good news is gold outperformed both stocks and bonds since then. But they've also done that since the turn of the millennium, which a lot of people don't know. And most recently, now gold has outperformed bonds for over 50 years. And let me just bring out something that isn't talked about a lot, Steve. And I'm not the guy that started this. It's a man named Andy Schectman. Andy has talked about how the central bank's banker is the Bank of International Settlements. That's like the clearinghouse for central banks. A few years ago, they made three tier one investments. They said there was three number one investments and everything else was second: stocks, bonds, and gold. And what I find interesting, and I guess from my financial planning side, is for every 100 people we sit with, one or two may have a little bit of gold. The rest don't have any. And yet it's considered by the central bank's banker as good as stocks and bonds. So I'm not saying everybody should turn, as I did, their whole portfolio into gold, but I can tell you it is an investment that gets absolutely, I like to call it the Rodney Dangerfield investment, because it gets no respect whatsoever. Still to this day, it's treated like kryptonite by most of the people in the financial community. And yet here, as you and I speak, we're at $2,400. And at the turn of the new millennium, it was under $300.
That's a pretty incredible run. You had a really good interview with Andy Schectman, by the way. I'd recommend that people go check that one out. I got to sit down and speak with him for about an hour a couple weeks ago, and man, that guy is so plugged in to the macro economy. He's got to be one of the best in the business.
Yeah, the only thing you'd say about him, and I think you would say, because we obviously both interview him, when we say you speak to him is really not true. We listen to him because he does most of the speaking, which is well worth it because he's a wealth of information.
He is. He is. I'm still going through his unit paper that he sent me. I'll put a link up for anyone that wants to watch that. Okay, Forrester wants to know. He says, could you ask Peter why he thinks the Federal Reserve will never go back to zero, even if a recession hits?
I presume he means interest rates.
I think so. Yeah.
Yeah. So uh, it was a phenomena that happened worldwide. I don't think anyone want to do it again because the repercussions of inflation, and I don't think the Federal Reserve could get away with going to zero now because of the incredible indebtedness. And now moving into a legitimate picture is, are we going to be able to pay our interest on this debt? So I don't think they could ever see a zero interest rate again, certainly for any time soon.
Yeah, I remember during that time, I was following a real estate guy, Jason Hartman, and he said that these are the lowest interest rates ever in 5,000 years. He said it's never been this low. We're living through a very unique time, and everyone took advantage of it by refinancing their house and getting 2.5%, or almost essentially free money.
But you know what happened with that? Who's going to pay more of a price than we will in the States and Canada? Canada, a lot of mortgages are just 5 years. So a lot of those people got their mortgages then, but they're going to be readjusted now. And to be adjusted from 0 to 1 to 5 or 6, it's a huge difference for most people. And one of the many, many issues that unfortunately our neighbors to the north have to run with us in terms of perils down the road.
Yeah, we're very, I guess, fortunate in the US in that we can lock in our mortgage rates fixed for 30 years. So you can calculate your payment going out decades, with minor variations, but essentially your mortgage payment is just fixed. And a lot of places aren't like that, like Canada. So I think that could be a really good precursor to what we're going to feel here. They'll see it first, and that'll kind of be a litmus test, I guess, of what we're going to go through.
Absolutely.
Yeah. Okay. Navarre wants to know, he says, how is Peter planning for the anticipated greater market crash where everything is affected? Scaling down or out of junior resource stocks? Or considering how many of them have come, holding tight, hoping for not much more downside? What's your outlook?
Well, I'm not a believer of a crash, so that's the first thing. In fact, I think the only reason we had a crash back in '87, which led to my so-called half famous career, is the fact that we didn't have mechanisms to prevent crashes. So I don't suspect we're going to have a 20 or 30% down day or 50% down week. There's been a guy that's been saying that for years, if not decades. But I do think the markets will greatly underperform compared to what they have for the last several years. Uh, and therefore, there may be certain industries that have prospered on the uh, superior strength that was being shown, and nothing could be more clearer than the things that have been crazy the last couple of years, the Mag 7 stocks. And look at this Nvidia here now. In just a month ago, everybody was talking about it, and I knew that was the trouble. But the interesting thing is, and I know you followed as well, is I guess I don't know if you remember seeing it that day. The CEO was shown signing a lady's bra. I don't know if you remember seeing that.
No.
Yeah, and that was the day it reached its all-time high. And I think that's going to become the symbol, because that could turn out to be the all-time high ever for that stock. But so I would just say his answer is I would prepare I I would prepare for much tougher markets and not the type of returns that have been offered in the past. Even in the bond market, which people have been shocked these last few years, who couldn't believe that they actually lost money owning a bond, which was in financial planning, investment 101, 30, 40 years ago. You went to bonds for the safety of not losing principal. So not a crash, but I think much more difficult times going forward.
Okay. All right. You don't see a massive sell off. You just see kind of a gradual underperformance.
Yeah, like I said, is I think one of the reasons you had such a down 20% day is it fed on itself, and the mechanics now in the market itself allows for some cooling. Doesn't mean we can't have a big one day where it's down 10% or something, or if there's such a tragedy, like nuclear war, whatever. Yeah. But I wouldn't be betting on a market crash.
Okay. All righty. And Matthias wants to know about the Chinese stock market. What's your outlook for the Chinese stock market at this point?
I think the more thing to look at is what's changed in the last 30 to 45 days. It certainly impacted one market more than any other, and that's the copper market. Up until about 45 days ago, there was still belief that China was finally getting its economic house in order. The weakness it was seeing was getting behind it, and things are going to be looking good. In fact, there was drawdowns in copper. There was a copper squeeze. And then suddenly, over a 30 to 45 day period, some really almost nasty looking economic numbers. And it's always tough with the Chinese with numbers, because if you think we play here, they play everything there, massage and all kind of stuff. But realistically, it gave a real big concern. So a market like copper has been hit by it. In terms of their general equity market, it certainly has come down hard. I'll just say this, and it may not be answering the person's question, but my belief going forward, and it's been for several weeks, in fact, since March, that if I was gonna own general equities, I would own non-US equities first. Then the second was small caps, which have had a rebound, and then the third was equity index annuities. So China could fall under that non-US asset play, but again, it's still a market that questionable balance sheet reporting is not uncommon. I'm trying to be in a nice way of putting it. And so if you're not a person that can stand any type of surprises, it's not the single best market to go to. Let's leave it that way.
Okay. Okay. All right. A lot of fuzzy math going on there.
Fuzzy's a
uh,
nice word.
yeah. All right. Gold. Are you still bullish on Metalla royalty?
Well, Metalla is a blog sponsor of my blog, but separate from that, the news recently was just a very interesting. And if we don't mind taking a minute on this, Steve, I think you'd find it interesting as well. The president, they hired a new president, great background, 10 years handled most of the M&A for El Dorado Gold, top-notch guy. He came president and he started by buying $1 million of the stock, a private placement. He put at current levels, not at some cheap, option price. You always have to take notice of that, especially in the mining, because insider purchasing is not prevalent in the mining industry. It's just not. It's not the same way as in other industries. And when your man buys that type of stock at the open market and resume, takes over as president, you want to take notice of it. It's a company that took a lot of hits because it went aggressively to acquire some copper royalties a couple years ago, but realistically is only going to start to see a good part of its book in royalties start to pay off next year and the years going forward. So I think it's seen its worst days. I don't think it's going to skyrocket to the moon. And this is a biased comment, but it has no inside info or any winks or nods from anybody in the company. But I think it's going to be a target of one of the bigger royalty companies because of the package that they have now that has great exposure to copper. So all in all, I wouldn't be against owning it myself.
Okay. Yeah, and I got nice copper deposits as well. Okay, and silver. Metali wants to know macro outlook on silver. Do you see anything in the recent drop last week?
I had thought, because for decades I got in trouble saying this at shows, I used to say owning silver was like kissing your sister compared to gold, because I would always feel gold was going to outperform it. And I always used to say I own twice as much gold as silver. And then it looked like silver was finally putting itself on par. And now, by golly, it kind of went back to, that falling back and being the second one. But its argument, supply and demand, is so stronger now than any other period of time. I just think it deserves to be in the same ballpark. And again, you have to own gold. I wouldn't own silver without owning gold, but I would own gold without owning silver. Maybe that's the way to show it favorable. But I think for most people, it's best to own both of them.
Okay. All righty. And moving on to copper. Someone you can't know and Hawaiian Eyes are asking about Arizona Metals. Any updates? Is it at risk of getting kicked out of GDXJ and, uh, you know, basically dumping another 5 million shares up for sale?
Well, I don't know the exact rules, but normally those things get dropped when stocks have had a large drop in their market cap. They don't meet the criteria. I don't think that fits that. So it certainly be something that I wouldn't be worried about or anything of that happening. The issue always comes back to there. We had a phenomenal God-given gift of management basically leaving with their tails in their side, and they should have. And I was a big advocate of that, and I think it proved correct because you just have to see how they left to know that there must have been something not of best interest there. Uh, the two issues that they had proposed, which I was so much against, has been tabled, and I don't think they'll ever see the light of day from the new management. But the issue that I also would always talk about, and that was their investor relations marketing side, which I said was extremely weak. And I'm using nice words, not some of the words I would use if we weren't on the video, remains the same. And I've offered multiple times for the CEO to come on and interview, and I just think it's a question of people learning to see how great the new people are that have taken over. But according to the single largest shareholder of their company, a man named Michael Gentili, who's now tells me he's had his third long conversation with the CEO. He tells me he's never felt more better about his holding. He is the single largest shareholder of the company. And that come September, when this great conference called the Beaver Creek Conference hits, that the company is going to be hit the ground running. So we have 30 to possibly 45 days more of, just hitting our heads because we don't see anything, we don't hear anything. And but I can tell you that the change in management, we went from single A baseball to major league starters. And I'm been more than prepared, and I said it for weeks, to give them the time to put their act together. Now, I will tell you something was very positive. We got more grade drill results, which clearly to me continue to point that the K mine is going to be a mine. But what very few people noticed, except one analyst did in their commentary, the company talked about a new drilling area where they're drilling called the North Central. And they added more holes to drill there. And once you put 3, 4, 5 in an area, you don't keep adding holes unless you're seeing something worth chasing. That's the only thing I would just tell everybody. That may be just a carrot, and that might hold us to get us through to September 10th when the show starts. But I think it was an important news event. So it's I haven't sold a share in this year, and almost probably for a whole year. And I actually bought some shares. So I still remain bullish, but I am the central point of everybody's anguish because I was really the only one regularly speaking about this company for 3 years in the retail world. And therefore they beat a path to my emails.
Yes. I'm going to share my screen here, and this is the copper price. You alluded to it a little bit when you were talking about China. It's called Dr. Copper for a reason. So we had this amazing run up to like $5.20, got a little ahead of itself. We've now corrected back. I've got the white line, just hoping it holds at $4. What do you see like macro here for copper?
Very good, Steve. And by the way, I watch your technical work. It's very good.
Thank you.
Uh, First of all, if you went back, you see that five's been hit before, so it's been a double or almost triple top sometimes. There you
Yeah.
can see it. So no surprise. The sharpness of the rally, the most recent one, was really on a copper squeeze. And of course, one of the most bullish things that you can look at, if just I'll wait till you, there you go. So let's look back to your 2022 lows, just almost around $3.
Yeah.
Since that time, we never made a new low or low. We have worked our way up. We last low was around 360 there at the beginning of this year. You're likely to see, right, that just under 4 really be support. I guess the argument would be is you could stay long until 360, but if it broke that, and the people that would be saying it's possible to break would be the people that like to talk about, you heard Dr. Copper. Copper is the key to the economic. Well, part of this reason for this sharp decline, it ties in at the same time that the news out of China started to become highly questionable. Now, I'm in the camp, and I may be because I almost have to be because of my portfolio, but I've been in the camp that really felt that that is being overblown to the downside. So we're likely going to go, I think, for the rest of the year, is probably trade 4-ish, maybe a dip below it to get everybody spooked, and then trade back up to like that 4 quarter 450. I don't think, and I never did, I didn't foresee 5 this year. Where the supply and demand story really takes hold is the latter part of 2025, and then in 2026 and beyond, we got some serious problems with supply versus demand in copper. And the ironic thing about this is having this pullback now versus staying up at 5, where guys would have got incentivized and maybe start throwing some serious money at new projects. This is only going to, again, keep that supply and demand scenario out past a year or so. bullish, if not more bullish, because more time will pass and we're still not spending the money necessary. Because if you're going to believe everything else that Wall Street's telling you, Steve, AI, electrification, growth, infrastructure needs to be built up again. All these things involve copper, and we just don't have enough supply in it. And interestingly, we had a merger, an acquisition announced in the last 24 hours, which I think again demonstrates that the M&A is there, it's ready to go, but it's got to feel that the prices for the metals are going to sustain the amount of money that's going to need to be spent to develop these projects.
Yeah. As we're talking here, I just kind of noticed maybe an upward trend line right there. This might act as a little bit of support if it gets down to the level that you're
Yeah.
talking about. That could be something, maybe nothing, but yeah, I'm hoping that around $4 holds. We'll
But
see.
that impacted a stock like Arizona Metals.
Yeah.
Is another reason. So here's a company still silent, still haven't heard anything that I know of publicly of the new CEO speaking. Copper's coming down hard. It still just picks up where it left off. The last news wasn't great, and therefore, until you get something to change that news, and so the copper decline has only helped accelerate that. But I pretty well feel that we may get a dip under 4, Steve. But I think you drew a great line. I really don't see that, 380, 385 is the absolute worst case scenario. And I can see also, we're getting down to that quite oversold levels now too.
Oh yeah, I love seeing RSI at 30 or below. That's pretty cool. Pretty cool. Okay, we got a lithium question. I haven't gotten a lithium question in probably over a year. Mike wants to know, any thoughts on drilling results that Canter Resources had this morning?
Well, maybe you haven't gotten any question because the people haven't come out from underneath their desk. I mean, that's a market that went straight up and almost basically went straight down again. But the good news on that company, and again, they're a blog sponsor, and I own a lot of this stock. I've been a significant buyer of it. I don't know who this person is. It's not a setup question or anything, but they made an announcement today of the completion of their first phase of drilling. And the one of the better things I can say about this company is they've gotten a lot of advancement by spending very little money. And so we're all excited about this next phase of drilling. But right now, these type of companies, unless they had beyond phenomenal news, just aren't going to grab the interest. But that doesn't stop you from doing what you need to do, which they're doing. And then as that mood eventually turns, and if they make progression on the corporate side, then hopefully the stock follows it. But it's probably, I would say them and nickel are probably the most out of favor metals related plays right now.
Okay, I just pulled up lithium, and now I haven't paid attention to this for a while. It was just tanking, but that's pretty compelling. This is the futures. If we take the kindergarten method of buying at this end of the chart and selling at this end of the chart,
Yeah.
it's starting to look a little compelling.
So Steve, as you know, I'm certain when you have that sharp of a sell-off or even the rise, uh, normally they just don't reverse right away. There has to be like even that initial rise went sideways and a little bit higher again before it started its decline. So we'd probably be best served if you were bullish to see it go more sideways for a while and allow those moving averages there to come down.
Yeah.
And the descent of moving average is something that I used to be very big at, and computers are so do all these things now. I remember, Steve, I'm having recalling doing with pens and paper and all that kind of stuff. But the sense of moving averages, if you're short-term oriented, are very, very important. And you like to see moving averages start to bottom out. And some people still use another good thing is things like Bollinger Bands, where sometimes markets get too whacked out one way or another, and it gets way above moving averages. I was a big player. You may not even know this, but when I first 10, 15 years of my business, I worked with a guy who was one of the co-founders of a thing called Gann angles, and all the using angle formations. All those things are done by computers now, Steve, all the programs and all. And half the fun was watching guys like that have these 50 sheets in the office all over the place, a pencil in the ear, All those days are gone, but though I miss those days.
Huh. GAN angles. I've never heard of that. I'm gonna
Yeah,
see if the software has
it
it.
was one of the more popular technical analysis in the 60s, 70s, and 80s. I think one of the reasons why now is because computer drag program is really moving markets in a sense artificially, not all because of all the things people are doing with algorithms and all. It's probably not anywhere as useful as it once was.
Okay. Is it just GAN?
GANN, double N.
Ah. All right. I'll look it up. Cool. Okay. Copper, gold, and silver. Jack wants to know. So he's talking about the BHP and Lundin mining
Yeah.
purchase of. Is it pronounced Philo or Filo?
Yeah, so that was the news today, and it's an important news event for those of us who are very heavily weighted in mining and juniors. It may not bear immediate fruit, but you should at least feel better today than you did yesterday. And the reason is two big players have gone after a project worth spending billions of dollars that still needs a lot of development before it can grow, which means the majors are now not just looking for something that's mineable ready, but are willing to go in serious money on projects that still need more money to be developed because of the need of replenishment of ore. I think it's probably, and the other good news of it is this, that stock was probably held at least for a good part of its time trading by people that played juniors at one time. So they're going to be replenished. They're probably not going to want to stay in and be the owner of BHP or whatever, they end up getting. And so that money will get replenished most likely back into the junior or mid-tier market. So it's a good sign. One or two more like that, and I think we could really uh, rest easy that we've seen the worst of the junior resource market and things should only get better.
Okay. So this is good news. Right on. And Tyler wants to know. He's asking about, well, indirectly about Victoria Gold. Like to hear his thoughts on the Yukon as a jurisdiction investment. Is it a case that good companies are being pulled down because of the pad failure?
So I have limited my plays in North America, and I've also limited to certain areas. One of the challenges of Yukon is a lot of times infrastructure and weather. In this particular case, there was an unfortunate accident. But what transpired there, which has happened before, and the bullish way of looking at it is when babies get thrown out with the bathwater, which happened to some of the other plays, which really had nothing to do with that particular incident. Uh, maybe you take advantage of that, but I don't follow it close enough to say whether or not. And I certainly would invest in Quebec or Ontario or even Newfoundland now before I would go out to Yukon myself. That's just for me.
Okay. Alrighty. And can you go over the steps to, you call it building your arc? Can you outline that for our audience?
Yeah, so I'm not Noah, but I have this past March, Steve said that my concerns have become so great about the future and the future past the next few months or a year or two, a 3 to 5 year scenario or further, that there were five big issues. The first was the debt, which it's hard to imagine. We just went over $35 trillion. Do you know it's basically doubled in less than 10 years? It's unbelievable how complacent people are, including the investment community about that. Anyway, so that's the first problem. The second is a retirement and aging crisis. The third is the immigration crisis. The fourth is BRICS, and the fifth is what I call political paralysis. And boy, you only have to look at politics in the last 30 or 60 days to know about that. So I said, you got to build an arc. And people said, well, why an arc? Well, I said, because we're going to really hit bad trouble waters. And the few of the things that I've told people is this. One, my motto in life for my own family is less is more. And I could conceivably own a bigger home. I could conceivably buy a bigger car. I could do things that could spend more money, but not only do I don't need them, but realistically, it puts me in a sounder, safer position. Two, become less dependent on government. think about this, Steve, and I know you have, so I'm not saying that for you to actually think of it, but your listeners. We're going to have 35 trillion in debt. Congressional Budget Office now says in less than 10 years, it's going to be $54 trillion. So I just use 50 and I put a 5% interest rate on it. That's 2.5 in interest expense. Someday has to going to be it because you're going to have to refinance, even if it was cheaper debt and whatever. We took in $5.3 trillion in the best year a couple of years ago as a government. Now, granted, there'll be some increase in government revenues over these 10 years as we get to that 50 trillion. But we're going to be talking about almost half of the money is going to go just to pay our interest. So one thing I can guarantee people, government is going to be able to provide much less services to you than they can now. So become less dependent on government. And here's the thing, Steve, this is only 3 or 5 years away. So most people listeners, God willing, are going to be alive when that period comes. It's not like it used to be 10 or 20 years off when it was 5 trillion, it was 8 trillion. It's basically right out there. It's just around the corner. And so that arc that I talk about is being more self-sufficient, capital preservation, especially the older you get, and almost 65 and over, has to dominate now over capital appreciation, meaning for every dollar you may be taking a chance to turn into 2, 3, 4, 3, 4 of your other dollars should be just in a position to preserve it. Yes, earn as much as you can, but without any real risk of the principal. And forget about the Joneses. Don't remember who they are. Don't even think about keeping up with them. Be happy with what you have. Recognize that billions of people in this whole world right now would trade places with you and me.
Yeah, yeah. I like that. Become less dependent on the government. That that could be
Yeah,
true
and
no matter where you live.
I'm not talking about we all go out in the woods and build a hole in the ground because there's going to be nuclear war. But understand this. So look at those things we talked about. So now we know the government's going to have to pay more debt. So they're going to have to raise taxes. All these guys say they're going to cut your taxes. That's not happening. So we have a retirement and aging crisis. 65% of Americans are working with paycheck to paycheck. So not only are they going to have to work way past that beautiful retirement commercials that we watch these financial companies display, but they're going to become more dependent on government because as they get older, they're going to need more assistance. Third, the immigrants. There's an argument. There's 10 million here. There's 25 million here. How many are here? Right now, they're a net liability. They're not a net asset. And they should stay that way for a while. So they too are going to be trying to get something. The fourth is the BRICS. That's a different story, but I really think we're going to learn more. And hopefully by this fall, you and I can have another conversation about it because I think it's the single biggest thing Wall Street will in its entire history miss out on and not recognize about. And then the fifth is the political paralysis. And you can go back and probably even with conversations with you I had 6 months ago, I was telling everybody, I don't think one or both of them would be on election day. Everybody said, you're crazy. Well, Biden's out and Trump missed by 1/8 of an inch.
Yeah.
Right now, it is so bad, Steve, that there is really no real hardcore legislation being done. Democrats and Republicans cannot work together, and they each have a splintering within their group and this one is moving more left and this one's moving more right. So with all those things, I think you got to be like Noah, even though when Noah was probably building that boat of his, it was sunny and 80 and they were going, hey, Noah, what are you wasting all that time for? I get the same thing now, from people, oh, the market's good, it's this, that, and the other. But I really think we have to prepare for the worst and pray for the best.
I've been thinking about the political landscape a lot lately, and I want to pick your brain on it for a sec. Just as an investor, which I gotta believe that gold is going to do well no matter who gets elected. Possibly uranium as well, simply because of the energy demand. What do you see coming in the political landscape with either a Trump win or a Kamala win?
Well, I think they're the most dramatic. So let's look at it without picking sides. Let's
Yeah,
try to
yeah,
walk the fine line, okay? So on one hand, we had a group that took the previous president from the time he first went down that escalator when he announced he was going to be president, had been accused of everything, including stealing the chickens, the kitchen sink. Okay, uh, was impeached twice, was blamed for a revolution, was charged 36 counts or whatever in 5 different states. All these things were brought against him, and possibly even a planned assassination. We don't know. We may never know. Okay. On the other hand, we had a guy that basically stayed in his basement, got elected, was losing during the middle of the night election. Suddenly by the morning, things turned around. Basically got worse as time went on, was seen less and less, more troubles about his health, all that type of stuff. His own family gets into all sorts of problems, all sorts of criminal complaints and acts, and found guilty on some things and everything. And suddenly he's turned and taken out and said, look, you basically can't run or whatever. And that conversation you and I would have had 20 or 30 years ago over lunch, you would have said to me, Pete, what South American country are you talking about? Sounds like a banana republic. Now it's our own country.
Yeah.
So yeah, it's going to play a big role. And one, I tell you, Steve, people know this. My wife's a Trumpster. Now I'm not. I don't root against the guy. I don't hate the guy. I sooner much see Donald Trump than Kamala Harris. But there's things about him that I have trouble getting over with. My wife doesn't. Okay. If he wins, do all these people that did all these things up until now just go, he won. Let's forget about it. Let's go about our way and live happily ever. No, I think they get 10 times worse. So I don't see, and if somehow he doesn't win, and apparently she's the heir apparent, because we can't say that now. Everything, who knows if she's going to go into the convention to be voted? Who knows what's going to be? But let's just say she is. If you think Biden was propped up and a puppet, there's no question she's more of a puppet. And so in either case, I don't see political calmness or a Barney moment. My people say, what's a Barney moment? I always used to say, because my kid, I go, I love you, you love me.
Oh,
We're
Barney the dinosaur.
happy family. No, I don't see a Barney moment coming in politics, Steve.
Okay. Are there any bets that you have that you would feel much more comfortable with a red win as opposed to a blue,
Very,
or?
very good question, Steve. There's no question that Trump would be far more favorable to things related to energy, uranium, oil. Because look what this administration did. He had us, we were energy independent.
Yeah.
We had pipelines set. We had all of this. By the time Biden got into it, within 2 years, he had to go to this already open beg so we didn't get gas over $5. So I think one of the things Trump, from an investment that I know we're involved in, is things related to energy will be much more beneficial for him. The second thing is, think about this. Think of your adversaries. Who are the known adversaries? People will tell you China, Russia, Iran, North Korea. Who do you think they would be more concerned about going to battle with us? All things being equal, Trump is commander in chief or Kamala Harris is commander in chief. So that also plays a role into how we might think, about our investments and all. And then I think the thing that mostly is, and what people are starting to get tired of, and that's the how far left we went with wokeness and socialism and all that type of stuff. Clearly, if Kamala Harris comes in, it's more of the same. It's not changing. I think with a Trump win, especially if there's a win that goes across the board, that the Senate, and you see that in state elections and all that, there may be a battle to revert back to an older style way. Do we go back to way make America great again? I think that barn door has already been opened. Do we lessen what we've had to deal with? Yeah, I think we can. Do we do that without a battle? No, I think there'll be a battle.
Okay. Alrighty. Trump would be good for energy. I come to the same conclusion as well, I think.
Yeah, it's just, he was before. Sometimes people say things to get elected, like, I'll just make this point to you. You know me, I'm not a fan of Bitcoin. I'm not a fan at all. Now, here's a guy just like Larry Fink a few years ago that said, I wouldn't touch Bitcoin with a 100-foot pole. He basically said that publicly multiple times. Now he stood this past weekend at a convention that the Bitcoin people have, and I think it's the greatest thing since sliced cheese. I'm ready to make it a reserve currency. Probably more of to get your vote than the likelihood that that's one of the policies he's going to implement and all. But I do think it's clear that he will reverse and make it expedite things related to energy, and that we would go back to be more self-sufficient. And I also think he's a guy that is going to pull back and say, listen, I don't even know if I want to be part of NATO anymore. Why am I protecting you guys over here? You can't even protect yourselves.
Yeah, that would be an interesting play.
That's a real thing. But you know what the real secret is, Steve? I know you've been very generous with your time here. The real thing that Wall Street is missing is what is happening with the BRICS. And what is happening, and the Andy Schekmans and some other guys have been really in the forefront of this. And to know that now 49 countries have expressed an interest, including some real important ones like Saudi Arabia and all. And the likelihood is that we're going to learn, at least come this fall, some idea of how they plan on implementing their trade, how they're going to do it in terms of monetarily, how they're going to do it in banking and so forth. And in all that talk that's leading up to that, the United States is outside looking in. It's not at all at the table. It's not at the table. It's not even in the stands. It's outside in the cold. So I think that's going to become a much bigger story that by year's end, more of us will be talking about, not just in the hard asset arena, but even the general financial service industry is going to have no choice but to.
The death of the petrodollar and its slow decline. Peter, thank you very much for coming on the show. If someone wanted to get in touch with you and follow your work, how could they do so?
Well, mostly on, I almost said Twitter again, X. I say X/Twitter, just hard to say X.
Yeah.
But on X is where predominantly there's also a blog at petergrandich.com. And then there's a YouTube channel where I'm blessed by people like you that interview me, and I put those interviews up there on my channel.
Awesome. I can't say enough about your Twitter and your YouTube channel. Love them both. Great content. Peter, always a pleasure. Thank you for coming on the show.
God bless you, Steve. Keep up the great work, buddy.
Thank you. And thank you for tuning in. Support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.